Hi, everybody. I'm joined today by Rob Topping, the founder of Topping Capital. Rob, thank you so much for being here.
Oh, you're welcome. Glad to be here.
I would love to have you give just a brief overview of what you do and then ask you a few questions.
Sure. We kind of sit at the epicenter of the ecosystem of alternative investments. So I come from the hedge fund world and know that world, but also have been active in real estate and spend a lot of my time in early stage venture, both in an advisory capacity and an investor capacity.
Excellent. And so, on that note, given that we're sort of heading into this recessionary period, and yet a lot of people, a lot of startups are still trying to raise funds from angels and people like you, I'm wondering, as an investor, are you tending to invest in fewer startups during this period?
I might be investing kind of the same amount of money that I would allocate to the startup bucket, but in fewer names. So maybe I'm a little more sensitive to runway than normal. I'd say 6 to 9 months wouldn't make me that nervous, and now today that might be more like 12 to 15 months. But I see lots of opportunity in periods like this for startups because if you go back and think to 2000, 2002, and some of the great companies that came out of that period, market share is never a problem if you have an elegant and innovative solution to a big problem. You can have a lot of macro headwinds, and it's still not an issue because there's such amazing opportunity ahead.
And are there any industries that you try to avoid at this time during an economic downturn, or does it change your investment strategy at all?
Maybe just kind of tweak it a little bit. I would feel like some of the more economically sensitive areas, I might be a little more cautious. And then there's other areas where I just don't do a lot of investing because it's too far out of my circle of competence. But doesn't change the strategy really that much.
So, but you do try to you do try to stick to your area of expertise. That's a common theme that I've heard. Interesting.
Yeah, yeah. And we're opportunistic investors, so area of expertise would be a liberal interpretation. What we're good at is kind of identifying the opportunity that where there's tailwinds, whether that was say distressed real estate 10 through 14 or early stage venture the last few years. There's some areas now that have big tailwinds, and it's an interesting economy and markets that way because I think more so now than ever, there's some areas with big tailwinds and other areas with big headwinds. And then we're good at kind of marrying that opportunity to the right team of that has the expertise.
Speaking of teams, what are some of the top questions that you ask founders when you're evaluating their companies?
Let's see. As I think about that, one would be just the sense of kind of their background and balance. And I think what I mean by that is, as to background, why would they have edge providing this solution to a problem? It could be technology background and innovation. It could be that they worked prior at a company where there was a problem not being solved, and the company was focused on all its resources elsewhere, and yet they saw an opportunity come out of it. And when I say balance, I often it takes kind of a balance of a visionary and builder with somebody that has some operational expertise. So early stage, you never get the full depth of team that you want because it's the chicken egg of capital and growth and which comes first. But you want to make sure they have at least either advisory or team members that provide some balance on operational execution, that balance kind of that vision of all in and build.
So, given that, what advice would you give to startups who are pitching to investors now?
Um, one of the like first rules is send them a one-page summary with a short paragraph or few sentences on, the compelling need of your solution. And I say that because often I'll see people send, 15, 25-page decks, either with no summary or right out of the box. And what will happen there is you might end up in a 3-week conversation or a 3-week wait to get a no, when a one-pager can filter pretty quickly to, oh, this person has an interest in seeing more, and might be a 50% probability of actually investing or introducing us to someone. And so I would say send, one pager. The other thing about that is it's a very difficult but excellent exercise to capture the compelling messages from your deck into one page. So I would do the deck first, and then I would do the one pager. And then the other thing I would say is, don't lead with the ask for money, because I often see it's kind of like an NDA or something. I often see conversations break down immediately on that direction, whereas if you lead with really looking for insight and help and potentially some introductions, sometimes it's that second referral that comes from the first conversation that actually leads to the money.
It's that old adage, when you want money, ask for advice, and when you want advice, ask for money.
Exactly. There you go. That's perfect.
Excellent. Well, this has been so helpful and very insightful, Rob, and I can't thank you enough for joining us. I'm sure everyone has gotten a lot of value out of this. So thank you very much.
Well, thanks for having me.
Of
Appreciate it,
course.
and appreciate what you and Net Capital do. Thanks a
Thank
lot.
you. Thank you so much.